Well, hi everyone. I am very fortunate today to spend some time with a very, very dear friend of mine, Neira Jones. Neira and I met years ago when Neira was at one of the leading acquirers, and we fought the credit card compromise fight together and handled around about 80% of the UK credit card compromises, which was a very, very interesting time. Neira and I have remained friends for years. Such a fascinating person, so well versed in the area of payment security, and not normal to my usual way, but I'm definitely going to plug her book, which is called Understanding Payments, and it's out on February 29th. I'm saying it because I bought a copy and I'm fascinated to read it. So Neira, thank you for today. Let's just jump straight in as we always do. Tell me, what's on your mind about payment security right now as we're going into 2024? What are the top things on your mind?
Oh, top things on my mind. Well, first of all, fraud and cybercrime will continue to increase no matter what we do. So it's all a matter of constantly keeping up, constantly innovating, and even more so nowadays when everything is becoming so much more digital and so much faster. It's about anticipating criminals rather than just reacting anymore. So that's one side of things. The other side of things on terms of fraudsters constantly innovating is what do we do, and what staggers me and surprises me all the time is there is, on the one hand, I'm going to sound very harsh here, a lack of common sense around, and so much investment being made in technology, perhaps not the right technology, and also not enough cooperation. And I'm not just talking about cooperation between markets or even industries, but cooperation within a single organization. Because there's a saying which I always like to use, which is and this is valid for both fraud, payment fraud, and cybercrime. If you actually imagine those being a balloon, if you actually squeeze that balloon in one area, it bulges in another. We've seen it so many times before. Let's take the example of the deployment of EMV chip cards. So EMV chip cards did wonders for face-to-face card fraud, in as much as in those markets that deploy EMV chip, specifically EMV chip and PIN, it almost eradicated fraud at the point of sale. And that's great. But what happened next? Of course, card not present fraud increased at the same level. So it never reduces, because essentially criminals follow the money. So going back to what I was saying earlier on, this lack of cooperation, not even within markets or between industry, but within a single organization. What staggers me is that you, especially now, so today, 2023, we are so much more digital, and the increase in digitization has been exacerbated perhaps fivefold during the pandemic. Mm-hmm. So we are where we are. The workforce profile is also changing. We're more and more remote, as we were discussing earlier on, but people also have taken to digital payments, even for those demographics that were not keen on digital payments because they've been forced into it. So we're now more and more digital. Then we have all the things about open banking and account-to-account payment and real-time payment. So everything is so much faster. Of course, we used to speed on card payments because they've been around for such a long time. So if that's the picture that we actually have, we now suddenly are faced with the fact that because we are so much more digital and the processes are so much more automated and digital themselves, and they are so much faster, as a result, you've got fraudsters that study payment systems, whatever they happen to be, and will find loopholes and will exploit them. And there is a very topical such loophole worldwide, and that is authorized push payment fraud. So authorized push payment fraud is a pain worldwide. Regulators are actually grappling with that, if indeed they are. I know in the UK they are quite progressive in terms of the regulation that will come into play next year. But if we look at other geographies, we used to authorize to unauthorized fraud, because unauthorized fraud is covered in all geographies by existing regulations.
Yes.
So when you do something and it was a fraudster, the account holder, the payment account holder, be it a bank account holder or a card account holder, will be protected because it was fraud, and that's covered by existing regulation. But when it's authorized fraud, you, as the account holder, have authorized the payment. You've been duped into authorizing the payment, but nevertheless, you've authorized it. So bank legitimately, as per the letter of the law, we said, you've authorized it, nothing I can do for you. And indeed, this is what happens in most geographies. But people nevertheless have been duped. That's one side of the coin. The other side of the coin is if we look at all the cybercrime statistics, and you know that very well, Dan, that is phishing and social engineering is a pain in our lives, because at the end of the day, fraudsters, social engineers will prey on human emotions. Human emotions are very powerful. So it can be guilt, it can be shame, it can be love. I mean, we've seen the predominance, it can be greed. So hence we have investment scams, romance scams, ransomware, so on and so forth. So we've got all of these things which, you know, make the top of the statistics. So if you recall what I said, so we've got authorized push payment fraud on one hand, that's kind of the realm of the fraud people. And then we've got social engineering on the other hand, which, you know, has real consequences. Cause and effect. So here's my question to you, Dan. When you talk to your clients, when you talk about fraud, cybercrime, phishing, social engineering, would the fraud guys ever be present in your discussions? Because certainly the cyber guys could definitely solve some of their problems.
Never, ever had a fraud person in on one of those calls, ever. Isn't that interesting?
And it is really interesting because for the last, I mean, certainly since as long as I've known you, Dan, I've always said fraud prevention and cybersecurity are two sides of the same coin. And yet, you know, only the most mature of organizations have actually realized this. And I've met a few during my career, so it's not impossible to do. But I give you a very simple example. So let's talk about phishing and social engineering, and let's talk about DMARC. Okay, so all cybersecurity professionals listening today will be very familiar with DMARC. I do urge you, go and look on your client email records, and will you actually find a DMARC record at all? Did they deploy SPF and DKIM? But I digress. This is not a technical chat, but I'm just saying DMARC is a free standard. It's been around for about a decade now, Dan?
More.
So
yeah,
something
forever.
like that. So I praise the activities of a not-for-profit organization called the Global Cyber Alliance. They have done a lot for promoting the deployment of DMARC worldwide. And I'm always interested to see what is happening, because I want to see statistics. Now, in a nutshell, I'm sure your audience will be familiar with DMARC, but just in case they are not, just in case we have fraud people listening, that would be interesting. So we have the DMARC standard that's been around for a very long time. Let's make no bones about it. DMARC is not a silver bullet. DMARC is just good cybersecurity hygiene when it comes to email environments. So, and that's great. And it will help, you know, with impersonation fraud, because it will essentially prevent an organization impersonating your domain and sending emails, and the recipient would actually think it's actually coming from you. So the mark stops that. But so much so because it's a problem worldwide, certainly in the public sector. And the public sector have actually realized this. And in the US, certainly in the UK, for example, the government mandated all government agencies to deploy DMARC since 2016. So this has been around for a very, very long time. So if you look reports, and these are all in the public domain, if you look at statistics, you will actually see that out of the top 100 banks worldwide, not even half have actually deployed DMARC on top of SPF DKIM. Very few UK banks, I'm interested in the UK since I live there, and some of them don't even have a DMARC record or have a policy that is set at none instead of reject. Now, don't get me wrong, it won't prevent all phishing attacks, because if you actually slightly modify a letter in the domain and everything, you could still fool people. But it's a very, very simple security measure to deploy. Now, here's the kicker. There is no such mandate of deploying DMARC in financial services, and especially payments. Now, here's the other kicker. The latest version of PCI DSS has DMARC deployment as a requirement, although it will not be, it's currently, what do they call it? They call it best practice. So it's currently best practice, and it won't become a requirement until I think 2025 or thereabout. So there's plenty of time to do it, but why not do the right thing?
It's relatively easy.
Quite.
Isn't
so
it
I'm not
interesting,
pointing
though?
fingers. Those can actually go and have a look at the statistics across the top 100 banks and across the top 100 retailers provided by a company called DMARCian. So you can look that up on Google, and I'm sure you'll be surprised.
It's quite extraordinary, isn't it? But that's that first filter or sieve in the screening process. And there it is. You asked that question earlier about clients and phishing. My goodness me, I have not seen so many clients get hit so hard, so consistently. And the real interesting thing, it's such a business, Neira. There are, let's not speculate about how these organized businesses are, and they are businesses, are structured, but they are persistent and they are consistent. And so the overriding theme, the overarching theme that I hear from so many CISOs is it's not a one and done in security now, and it's not a one and done in fraud, but it's more of an iterative process and a continuous process to keep that hygiene, the filters, the ideas, and obviously then the compliance schemes or regulations that sit behind the relevant use cases to then either get on board, start mandating, start best practicing, and so on and so forth. You've said something really interesting I want to pick up on, and we haven't talked about it before, but it's something I pick up on a lot, which is anticipating. How many organizations are in the sense of anticipating what's going on? I hadn't thought about that until recently. Tell me what you're thinking there.
So here's my thinking, Dan. We've got to look back, specifically in financial services and payments. So let's look back 20 years. We look back 20 years, we probably have a good grasp, not only on fraud prevention, but also cybersecurity, and we're still kind of fairly happy with passwords and such likes. Obviously, the world, as you know, has moved on. 20 years ago, you probably understand what your main types of fraud and crimes are. So you would have fraud prevention systems that would be rule-based, and you would accumulate the rules over time. If this happens, then I do this, and so on and so forth. So rule-based systems. Now we've got automation. Now we've got AI. So an AI is as well as a vector for good in terms of operational effectiveness and fraud prevention, but it's also a vector for bad because fraudsters as well use AI. I mean, look at the scams that are starting to appear using AI to impersonate people. It's becoming increasingly difficult to do this. So, so it's all a matter of context. So it's all a matter of behaviors. It's all a matter of analyzing patterns. Of course, you can't do that with rule-based systems. So rule-based systems, certainly in financial services, are being phased out in favor of more modern alternatives, which essentially use behavioral analytics and other AI technologies and machine learning to be able to anticipate what might happen, derive patterns from certain behaviors, because everybody is basically conducting their lives on this this little piece of kit, and by the way you're typing or whatever the kind of technology you're using, in order to be able to have some foresight as to what might happen, and is it normal behavior from this particular individual, and should I incorporate extra checks or include a bit more friction in the increasingly seamless experiences that we have when exactly. So that's what I meant by that. Is we can no longer remain on rely on the static rules. They may very well have a part to play. Sorry, but now it's a matter of everything is so much faster that you've got to be able not only to react faster, but to anticipate what might happen very, very quickly. Because with faster payment, you do it and it's done and it's gone.
It's gone. But that friction is, it's almost in some instances going against the user experience in the first instance. And, even simple bank payments now, it's almost like you have to press on to get through because the number of caveats saying, are you already an authorized user? Are you doing this? It is very interesting on that anticipation. I don't think people have the time or the bandwidth to anticipate. Now, tell me more about the cooperation side as well, because anticipation is one half of the cooperation coin, perhaps.
But going back to the previous point, Dan, you said people don't have neither the time nor the bandwidth. And that's the nub of it, because people can't do this. So therefore, in order to be successful nowadays, you completely have to rely on automation.
Yes.
You have to use technology. And that's not just because fraudsters, evolve and innovate themselves. That is also because the regulatory landscape, especially in financial services and payment, is ever more complex, and it's only ever going to become more complex. So complying with not only your regulatory obligations, but also doing the right thing towards protecting your organization and your customers and your partners actually requires automation. And I always like to make this particular point. So EY produce what they call their RegTech universe. And in their RegTech universe, they actually list a number of companies that essentially offer automation in the area of regulatory compliance and cybersecurity. And they've got 5 or 6 categories. We're now on the 2023 report. I've been looking at this report for maybe the past 10 years. And the first time I looked at it, there were 88 RegTech companies listed, from reporting to identity to KYC and so on and so forth across the various categories. The 2023 report has in excess of 250 companies in it.
Yes.
You can no longer do this without automation, because you are absolutely right. Not the time, not the bandwidth.
And that gets in the way of all sorts of other things and creates that complexity that then the fraudsters ironically can navigate to their advantage. I thought for a little while you see trends and themes, but the phishing side is getting so very, very clever. And as you say, it's now getting very clever at predicting emotions, behavioral traits, impersonating in other ways and mixing up other things. We found on a previous talk that we did that actually that whole mechanism was abused by exploiting customer service rules, because the customer service rule was being timed to resolution. Absolute light bulb moment. So their own business process was enhancing the fraud process unknowingly.
Absolutely. And the thing is, when you look at fraudsters and cyber criminals in general, they know their market. They really understand it. And I'll give you an example: contactless payments. So contactless payments saw a massive surge worldwide, during the pandemic, because nobody wanted to handle cash. And then because everybody was using contactless payments more or less worldwide, the value limits were increased. So in the UK, it became £100. So more and more people use contactless payments. A very little known fact, certainly in Europe and in the UK, because we've deployed EMV chip and PIN. Contactless fraud is minute. I mean, it's very small. So basically, the industry is doing something right. So I was very surprised. For me, that was perhaps the most surprising fraud that happened, and it was very notable in January of this year. And essentially, what happened when I thought, that skimmers and shimmers were as far as it was going to go. No, criminals actually repurposed Prilex. Now, if you recall, Prilex as a piece of malware is kind of rather ancient. It came about in 2014, I think, and Prilex was used to compromise ATM machines. So what did criminals do? They repurposed Prilex to target contactless payments. So, and essentially what happened, they compromised the payment terminals so that when you go and make a contactless transaction, the malware would actually block the contact transaction and force the cardholder to insert the card. So now suddenly you insert the card, so either it's an EMV market or a non-EMV market, so there may be a skimmer or a shimmer in there, repurposing so that, and if criminals go to that extent to actually force contactless transaction to become contact transaction so that they can compromise them using a shimmer or a skimmer, that means that contactless security works. And I know there's been lots of detractors, but nevertheless, that's innovative.
It's hugely innovative. And it's actually very simple.
It's hugely innovative. And very simple. Absolutely.
Let's explore this in part 2. So I think there's a whole bunch of questions that I've got around this and using, the innovation process and simple things, but simple can be super complex in its implementation or its ability to compromise people. Let's talk about that in the next section. But for now, Neira Jones, thank you, and I'll see you on the other side.
Absolutely. It was a pleasure, Dan.